Are you a private individual investor seeking more attractive and more aggressive, higher-yielding fixed-income investment opportunities? Would you consider private, local real estate-backed investments offering 7% APY for a one-year term, paid in 12 equal monthly installments? Okay, now would you also appreciate it if that same investment offered an additional one-time lump sum return at maturity of 10%, bringing your total return to 17%? Now, would you be willing to consider profitable real estate investment opportunities with reputable home builders and developers working on upcoming projects that can deliver such returns? Great! Did you know that you can capitalize on the sales of the newly built single-family homes, townhomes, condominiums, and residential subdivisions rapidly being developed across the country? It's true. New homes are built and sold every day. As a private investor, you can capitalize on this trend. But how? You can talk to Builders Commercial Capital Group, or BCCG for short, about earning strong returns from your local new construction housing market. BCCG is a commercial mortgage banking firm that works directly with private investors to fund construction and development projects that are sponsored by experienced home builders and real estate developers. BCCG offers investment opportunities to finance built-for-sale residential development and construction projects that include luxury custom homes, fair market single-family homes, townhomes, condominiums, new home communities, and land subdivisions. BCCG's note investments are designed to match your fixed income objectives, letting you earn returns from the revenue generated as each home is built and sold. Recent shifts in the commercial banking and lending landscape have made traditional construction financing increasingly difficult for builders and developers to obtain construction loans like before. Many of them are now turning to private investors to ensure their 2026 projects can proceed as planned. Now, most single-family development projects range from $100,000 to $15 million, depending on the project type, number of homes to be built, location, scope, market conditions, and construction costs. These budgets drive the financing requests BCCG receives from its builder clients. Instead of selling these notes to commercial banks or institutional investors, BCCG opens opportunities for private investors to participate directly. To make participation in these projects practical and feasible for individual investor participation, BCCG uses loan syndication, which is a standard industry structure that allows multiple investors to fractionally and collectively co-invest in a single mortgage note. BCCG's syndicated note investment structure accommodates investors that wish to participate with varying stakes tailored to each investor's goals, objectives, liquidity, and financial capacity. This structure enables participation from multiple investors without requiring any single investor to provide the entire loan amount. For example, a $150,000 single-family home construction loan can be funded by 10 investors making a $15,000 investment, while a $15 million townhome subdivision could be shared among 75 investors, each making a $200,000 investment. Once underwritten, BCCG divides the underlying promissory note into smaller mortgage shares called loan participation notes, or LPNs for short. Individual investors purchase these LPNs to receive their proportional share of principal and interest payments directly from the builder according to their contractual stake in the note investment. Essentially, the investors as LPN holders collectively act as private lenders, financing the home builder's projects while enjoying full transparency and real-time insight into how their capital is deployed. BCCG's investment model is straightforward. Private investors capitalize on the builder's profit margin, which is the spread between the wholesale cost to build and the home's retail sales price at completion. Every BCCG note follows the same three-part payment structure for investors. 1. Monthly interest payments during construction. 2. Full repayment of principal at the sale of the home. 3. Additional lump sum return at maturity of 10%. This remittance is called the due-on-sale interest payment. The interim interest rate payable to the investors is fixed at 7%, which is the current Wall Street Journal prime rate as of today. This remittance is prorated over 12 monthly payments. Now, let's discuss the numbers in greater detail. Most home builders build with a wholesale-to-retail ratio of about 1.45, meaning that if a single-family home costs $540,000 to build, it must list for sale at 1.45 times the $540,000 budget, equaling $783,000. Thus, the resulting $243,000 gross profit margin will sufficiently cover the principal loan repayment, the due-on-sale interest payment to the investors, off the top, real estate sales commissions, and the closing costs, while still leaving a substantial net profit for the builder. Now, on average, a typical 4-bedroom, 3-bathroom, $540,000 single-family home construction project would take 12 months to build and sell. So, BCCG would underwrite a 12-month construction loan for such a project. That $540,000 note would carry a 7% interim interest rate, equaling $37,800, payable monthly to investors at $3,150 over the 12-month construction period. Additionally, a one-time due-on-sale interest rate of 10%, equaling $54,000, will be payable to the investors at sale along with the $540,000 principal, bringing the total investor remittance to $594,000 on the day of the sale. Our mortgage note investors are contractually entitled to be paid off the top. They're the first money in and their first money out. Furthermore, during the construction of the home, the investor's capital is protected through several fiduciary controls. 1. A local commercial real estate attorney ensures federal and state compliance for every loan closing. 2. A title and escrow firm manages all investor funds, preventing BCCG from accessing or controlling escrowed note investment capital. 3. An independent loan administrator oversees construction disbursements, with a third-party site inspector performing random audits. 4. An insured loan servicing company collects interest from the builder and remits payments to investors by the 5th of each month. Now, what happens if the newly built house doesn't sell after completion? Well, if a home isn't sold by loan maturity, the builder faces default risk. To mitigate this, BCCG implements proactive pre-selling strategies with the builder and a local real estate brokerage firm, marketing the home to vetted buyers during construction. Repayment of principal and interest relies solely on the home's sale, so BCCG, the builder, and the real estate brokerage firm collaborate closely to ensure timely, profitable project completion. Just so you know, BCCG is not a licensed securities broker-dealer or investment advisory firm, nor do we operate in any capacity requiring such licensure. BCCG sells fractional commercial construction loan notes solely in a transactional capacity as a commercial mortgage banker. These fractional notes are offered as direct participation investments, giving investors a direct ownership stake in the underlying mortgage notes secured by the home under construction. Through the Note Investment Participation Agreement, BCCG equitably assigns each investor's proportional interest in the promissory note, making them co-investors in the actual debt instrument, not in BCCG, the developer, the builder, or any fund entity. These are not pooled or commingled vehicles such as mutual funds or REITs. Each investor participates solely in a specific, identified construction loan originated by BCCG. Similar to holding a bond, investors own a direct interest in the mortgage note itself. Their returns come solely from the performance of that specific loan, interest payments, fees, and principal repayment, not from BCCG's operating results or any projects not funded by their investment capital. All notes are structured as private placements and are issued under securities registration exemption provisions promulgated under Regulation D, Rule 506 of the Securities Act of 1933. The commercial note offerings issued by BCCG are available exclusively to individuals who voluntarily register on BCCG's website and request consideration as prospective private mortgage note investors. Registered investors would receive a detailed commercial mortgage note investment summary, including downloadable exhibits and a conditional letter of intent, or LY, to participate in a particular project. Investors are encouraged to review all materials with their spouse, partner, legal, and financial advisors before committing to any project investment presented by BCCG. Upon the completion of due diligence and submitting an LY, investors would then have 7 business days to sign a note investment participation agreement outlining terms and providing the title company's escrow deposit instructions for that particular project. This introductory video briefly explains how BCCG works with private investors and home builders. Prospective investors can access detailed information through the links in this video's description box below. The first link takes you to our landing page at www.bccginvesting.com for more detailed information, and where you can complete a basic opt-in form to gain access to restricted content for prospective investors only. The second link below is to download a more detailed PDF introductory packet that contains a typical single-family investment scenario. Please review the information and connect with us. BCCG has upcoming projects for January 2026 needing immediate investor participation. We look forward to helping you obtain some awesome returns and contributing to your continued fixed income investing success.